Hey guys, what's up? Average Trader here. Welcome back to the channel. We've got a new video for you here today. And in today's video is a bit of a good news, bad news story. So the good news is yesterday we cashed out of our Australian dollar short and we made some nice profits. We got around $380 out of the trade, which makes it around about a 7.5% trade, which is pretty good. Actually, we generally like to see anything around 5% on a trade is really nice, so 7.5 is good. But the bad news is, and I know I'm being greedy when I say this, I just feel like this trade had a lot more to give than 7.5%. The market, when we woke up on Monday, heavy selling pressure across the board yesterday, very, very risk off sort of tones across the board. We had the indexes down by around about 3% across Europe and the US. And we had a lot of selling in the Aussie dollar, New Zealand dollar. Most of the risk pairs were basically selling off yesterday, so everything was looking good. We came down, we got through the moving averages, and we got a test here of the 4-hour 100 moving average, which I expected it to bounce maybe here and then sort of come back up and then sell off. And where I really wanted to see it was testing this trend line yesterday, or maybe down even at the 200 4-hourly average. So around about 67 would have been perfect. But after we got this bounce yesterday, we started to move back up. And I noticed that it wasn't just a regular bounce, there was actually some sort of strong buying pressure in here. So once I started to see that, I immediately took some positions off from the top just to bank a little bit of profit and just kind of make sure that we had something put away in case we did get a full bounce back up and sort of, we don't want to watch all of our profits evaporate. The good thing about that is, at least, if you bank some down here, you can resell it when you get up here as well. So you can kind of add back in. You can end up with a similar position size. You probably won't have the same average. You definitely won't have the same average, but at least you'll have your position size up and you'll have some money in the bank. So that was the plan. I said to you guys on, I think, Sunday, or maybe in one of last week's video, that this trade, once we cross below the 4-hour Bollinger, a retest of that would be sort of the line in the sand. If we closed above the 4-hour Bollinger Band, that's my sort of cue to exit, take what I have and run. And if we bounced off it and we showed some sort of strength back to the downside again, we may even add in at that point. So it's kind of a 50-50 place for us. But anyway, yesterday we had the strong move up, and it was all due to the Federal Reserve again. Once again, Federal Reserve comes to the rescue of the market. Jerome Powell can't sleep at night when the S&P is down, so he has to come up with a new plan to save the markets, a new program, a new way to buy more and more debt. I don't know what the hell it is, but anyway, out he came yesterday with another story, and he sent the S&P into a huge rally yesterday. The story I'm referring to is this one, and it says here, Federal Reserve says it will direct buy corporate bonds instead of just ETFs. So, I mean, I'm not sure if this is warranted. Yes, there was a big sell-off in the market the other day, a couple of percent down, but we're almost at all-time highs across the board. A place that most people wouldn't envision the market being in anyway. So I didn't think a sell-off of a couple of percent was that much to worry about. But obviously, for the Fed, I don't know what they're hiding. It sounds like they're hiding something, but they had to come out, pump the market with this news story about buying corporate debt. And in case you guys don't know, I mean, I'm not 100% sure on this. This is just my interpretation of the news. But from what I understand, corporate bonds are sort of much more risky asset than the ETFs, the underlying ETFs. So this is another signal to the market that, if you want to take risk, if you want to over leverage yourself, if you want to, use all the company's money to buy back shares and to be reckless with, then the Federal Reserve's got your back. So it's just a green light for the market to rally, and rally it did. So yeah, that's where we ended up yesterday. As I said, the S&P was actually down at around 29.35 yesterday. At a certain point, we had a strong move below the 4-hour 200 average, which I thought was going to hold, but we started to see this buying pressure. And I'm not conspiracy theorist here, guys, but actually this buying pressure came in a lot earlier than this, before this news was released. So I'm not sure if people kind of knew this was coming or what, but anyway, strong rally all the way up, rallied up about 200 points yesterday, guys. So over 6% of the market in one day. It's a huge rally. Um, and of course, the Australian dollar, with its strong correlation to the S&P at the moment, followed suit. So yeah, we closed out here at the 4-hour Bollinger. We banked 380. I wanted to have more out of this trade. So um, it's just unfortunate. But we may not be done with the trade yet. We're going to see how this plays out today. I'm going to pay particular attention to what happens here now in the next couple of hours. We've crossed back below the hourly moving averages now, and we're kind of seeing a bit of selling pressure across the board again this morning. I don't really want to get involved in a sort of up and down market. I want to see clear direction, and I want to have a kind of a good idea of what's sort of going to happen, as best that I can. So I'm just going to wait. I'm going to sit in my hands for a little while. There is a possibility that we could be starting a downtrend here, and that this 200 point move that we saw yesterday was just a spike up based off of this sort of good news from the Fed, and then the market's going to kind of realize when it's up here, oh, actually things are still really bad, coronavirus numbers are still going up, etc., 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 and then maybe we start to see a slow sell-off again. So I'll be keeping an eye on the Aussie dollar short. It is a trade I want to get back into. Aussie yen would be probably option number 2, but it's basically the same trade because it's all based around the Australian dollar at the moment. There was a couple of things this morning that came out that kind of spooked the market. I think one of them was this. North Korea appears to have blown up an inter-Korean liaison office in Kaesong. I'm probably butchering that name, but that's what it reads to me. So yeah, there was a story came out yesterday that said that the Koreans were planning to move into a demilitarized zone in between Korea and South Korea and North Korea. I don't really understand why they do it. Some sort of show of aggression as usual with Kim Jong-un. But yeah, overnight there was reports of an explosion at this inter-Korean liaison office. So the risk stocks, the risk assets have taken a bit of a dive this morning. It says here S&P futures are now down to 8%, plus 8.8%, sorry, and have been up around 1.4 earlier on in the day, overnight, should I say. So we might see a little bit of risk off happening throughout the day. Not really too much in the way of news today. We have the retail sales later on. That's the one that we really want to pay attention to. If you remember my video, was that Wednesday or today? Yeah, not today. If you remember my video from last week, I mentioned that the retail sales is very important this week. This is a kind of a market-defining number this week, depending on how serious this story is. But if we're just going off data, this is kind of a big one because, as I said, the US economy is very, very consumer driven. I think 75% of the US economy is just based on the consumer. So they need to see that the consumer is coming back strong after the lockdowns. And if we get a beat on these numbers, that's probably going to be very good news for the market today. We're going to see more risk rally. If we get a miss on this, yeah, we may see a little bit of a sell-off because they may interpret that as the recovery is a little bit slower than expected. We're not bouncing back as quickly as we expected. As quickly as Larry Kudlow says we're going to bounce back, and yeah, so we'll see what comes out there. But I think that's going to be an important number today, and I think we have Chair Powell is speaking later on today. Yeah, so 3 p.m. Federal Chair Powell is speaking. So my plan today is I'm probably just going to sit on my hands for a little while. I'm going to see what happens here. Oh yeah, this was an interesting one. I just wanted to show you here in the S&P. I pointed out this rising wedge formation, which we moved strongly out of during the sell-off last week. Came up, bounced off it, and we moved back down yesterday. Then we had the risk rally. We've actually tested it this morning, and we're bouncing off it again. So it's going to be interesting to see what happens here with this area, and yeah, just one to watch. But as I said, I'm going to sit on my hands with the Australian dollar for now. I'm going to wait and see what happens here. If we start to see some sort of strong indications, particularly if we hold below 69 today. 69 I think is kind of a line in the sand at the moment. You can see it's a bit of a level here as well, like across the board. So we tested it a few times, rejected it. We came up during the sell-off, tested it, rejected it. Yesterday we shot straight through it because obviously the market was in such good form. But anyway, Yeah, hopefully if we can get some sort of strong sell signals today, then I'll probably, you know, reconsider entering this trade again. But we'll have to keep an eye on things. So I guess that's really it for now, guys. I don't have too much more else to say on the trade. If you've got any trade ideas yourself, I'd be happy to hear about them in the comments below. And yeah, that's pretty much it. I'll come back tomorrow, I'll give you an update. Hopefully we'll be back in the trade. We'll be in some good profits by that point. So keep posted, and I'll keep you posted on that. And thanks very much for watching. See you. Bye bye.